If you are self-employed, please do not go to a bank when you need to buy a house. And I'll explain in just a second, just stay with me. But first, if you're new here, I'm Theoni the lender. I've been a lender for 10 years and I help people every single day from this app right here buy, sell, and refinance a house. Let's get into this. In the last couple of years, the economy has been insane. So people's way of making money is not your standard like W-2, 9 to 5 income anymore. So many people that own businesses or are influencers on this app, or I just did a loan for a professional gambler. Crazy, but I did. They do not have income that is consistent or by the books to get approved for a mortgage. So when they go to a bank, if you don't fit in this tiny, cute little square box that they have, then you will not be able to get approved for a mortgage, which is incredibly frustrating because you might make actually a lot of money, but you write off everything and they have to use the income after all the write-offs. Which also makes sense because as a self-employed small business owner, creator, influencer, whatever, you have to write things off. That's kind of like the perk of being self-employed. But when you go to try to qualify for a house, you don't have enough income after the write-offs to be able to qualify for that mortgage. And so not a lot of people know this, but there's something called a bank statement loan. And if you're a CPA or a financial advisor, you probably haven't advised your self-employed clients to do this because traditionally they are known to be higher in rate and just higher in cost. And that is true for most banks and most lending companies besides Cross Country Mortgage, which is the bank that I now work with, because we do it in-house. The cost to do those loans before were so high because there was a middleman. We had to broker it. So the cost would be so high because so many people were hands in the pot. But now that we do it in-house, we have our own income qualification team. We have our own underwriters. Everything is done in one place. And so the interest rates, if you put 20 or 25% down, are pretty much the same as a conventional loan if you did 20 or 25% down. You can do as little as 10% down. The rates are not going to be as great. I'll just be honest with you guys. If your credit is above like 720, 730. The minimum credit score that you need for something like this is probably going to be like 680. I've done lower than that with some exceptions if you have a super high down payment, but the interest rate isn't going to be cute. So 680 and above. Now, what we usually do is just take your last 12 months of bank statements and we calculate your income based off of the average deposits, not your tax returns, which when we calculate income that way is typically actually how much you make. So then your chances of qualifying for something that you can actually also afford is significantly higher than if I was to look at your tax returns. Now, if you're looking to do something like this in 2026 and buy a house because you just keep getting rejected by a bank who doesn't understand these programs, or you're getting quoted like incredibly high prices for the bank statement loan, this is 70% of my business and this is pretty much all I do. So head over to link in my bio to get started and follow me along here for more mortgage tips.